Hey guys, welcome back to the channel. This is episode 7 of Trading the Option Wheel Strategy to $1 million, week ending October 31st. As usual, we are trading the options wheel strategy to $1 million, which is consisting of selling put options, potentially getting assigned, and selling call options. And as usual, this is not financial advice. Please use your own judgment and don't just copy my trades. So this is the portfolio update for this past week. Friday was a green day, up $576. The account value is sitting at $261,520. As you can see, it was a red week, even though we got some nice premiums, including Spotify over 1K, Palantir about $700, and IWM about 500. It was a down week because we played a few earnings on our holdings. Again, one of my trading rules is do not play options during earnings, but on my long-term holds that I get assigned, those have to go through 4 earnings report a year. So unfortunately, there were some successful ones and some not successful ones that we'll get into the video. So definitely one step backwards, but still up $29,630 on the year, 11.33%. So current activity, I am playing Bitcoin again. I think this is the iShares Bitcoin ETF. I think the US dollar is going to keep losing value, and other let's call them alternative currencies that usually have an inverse relationship to the dollar, such as Bitcoin and precious metals such as gold and silver, are gonna go up because of this. So I think this is a good play, and I bid so I can do the strategy and write options on it. So one day so far bought on that Friday, 1031, up almost 30% or $50. So we'll see if this trend continues, and we'll close out at 50% profit this week, hopefully. So then go into the realized trades of last week. Spotify came in and collected a full premium, held for the full month, did not close early, stayed, dropped. I bought it right here on that green arrow up, which is very last day of September, I believe. It showed a strong bounce off of the 90-day SMA, but then it held some price action, strong rejection off of that 700, 710 mark right here, and then started to trend down, broke through the 90-day SMA, rejected it, and then found some nice support down here off of the 200-day SMA. So this was the we've been trading Spotify in the series. It's been a channel favorite. We've been trading it for the last month and a half now since the series began, and I think overall have pulled in over $4,000 in premium from just this stock alone. And as you can see, this was the closest that we have gotten to getting assigned on Spotify. I sold a 650 strike, and on Friday expiration, it closed at 655. So again, still a favorite. Have gone through some turmoil with their CEO stepping down, but their earnings are coming up, which I am not playing. I'm sitting it out, but we'll continue to write options on this if they have a bad earnings or good earnings, depending on if the chart and I still like the fundamentals. So this one was interesting. This one was Webull. We've seen this on the channel once. I sold 4 put contract at $11 strike price, and this is going to show how the wheel strategy can work even if the stock price goes down. The stock closed at 1082, and I actually closed my contracts early, so this was not 100% profit, but I still collected $130 off of a 1 month hold. You might ask, how can that be if the stock price dropped below my $11? The stock price closed at $10.82. It dropped below the $11 strike price where I wrote the contracts at. But here's the thing, theta is on my time. Theta is on my side. It is time that's on my side. So it dropped below the $11 strike price, but the power of the wheel strategy is it can drop below the strike price and you can still make money from the contracts because the premium that is embedded into the contract is theta and time. So holding that for 1 month, taking that 1 month of risk of the stock potentially going up sky high, capping your gains, and potentially going to zero. I took that risk and I got paid for it. right here, $130. So did not get assigned and collected the profits. Same with HIMS. I sold 48 and $46 strike price. As you can see, it closed at 45 below both of the strike prices, and I collect $130. I did not want to get assigned because their earnings are this week, but if their earnings were not, I would have been very happy getting assigned on both these strike prices and continue to play this stock. So we'll see where the earnings are. They report tomorrow on Monday. So now comes the earnings on the current holdings. It is earnings season, and whoops, I forgot to paste my total, but it's at 8%. Last week it was at 8% loss. Last week it was at a 15% loss, so gain an additional maybe $800. I mean, you can see from the chart here at the where it was last week. It was in the 140s. Now it's in the 150s. So they had a good earnings report. Their guidance was a little weaker for Q4, but they crushed earnings for the last quarter and are seeing a demand. But again, steel is cyclical, and my play for this is honestly, I believe that with all the data center construction, I think it will create an adjacency with interest rate cuts. I think they're going to need a lot of steel to construct those, and this is going to be something that props up the steel industry, as well as lower fuel prices to make it. So I think I'm still holding this, but if I'm still down, I will harvest for tax loss harvesting reasons. Man, I'm sorry, guys, that I forgot to pay something, but this is the total loss. This is where the wheel can go wrong. I mean, that I'm at 41% loss, so just imagine a 401 number right there. 41% loss, which is about 5.5K down on Sprouts Farmers Market. Got a sign at 135. Played the stock a few before, so my cost basis is in the high 120s, and they had a pretty big, in my opinion, overreaction on earnings. It dropped like a falling knife here, and so now we're at a heavy oversold territory with RSI sitting at 17, way below the 200-day SMA, way below the 90-day SMA. But guys, I want to be transparent about my losses, and I want to be transparent about my winners. I mean, this is a part of the game, and it sucked. I mean, I'm not gonna lie, seeing that earnings did not feel very good, but that's a part of the game, and I thought they would have a good earnings. Again, I'm not playing any options during the earnings. I'm just holding this actual stock itself. And unfortunately, fortunately, they beat earnings. They beat by revenue. They opened up a lot of new stores, and have good plans to continue opening up stores and growing NOI on each of their stores. But they didn't beat earnings as much as I guess the street expected them to in retail. So, I mean, it is what it is. And plus, the market seems to be very cautious about new players entering the game, such as Amazon, into the organic kind of produce and healthier niche lifestyle that consumer trends have been trending towards. So still holding. Stock closed at about 78.96. So we'll see where this week, if there is a slight recovery or not. But I mean, hey, this is the wheel. This is why it serves as a reminder, important to diversify. I mean, even though this made us red on the week, collecting the premiums from every other company that I've been playing almost made up for it. So that shows the true power of the wheel strategy and why it's important to diversify and not just put all your eggs in one basket. And again, another crushing earnings, Waste Management dropped, which I think the implied volatility was plus or minus 5%, and this was 8 or 9% down. So, more volatility than I expect, especially for a stock that is very, consistent and not volatile. I thought this would be an easy 1K play, and now we're down. Imagine this is 3K. Again, I apologize for not pasting the current in here. I totally forgot. But yeah, still keeping it, and if it recovers a little bit, I'm gonna start writing calls at the 220 strike, not the 230. So instead of a 1K gain, I'm changing my game plan on this, and just getting out with the premiums that I've collected, which is probably $300. So Hopefully this will be slightly break even, but again, not good to tie up capital. If it's still down by the end of the year, I'll use it for tax loss harvesting. But again, it's in oversold territory at RSI under 30, currently sitting at 28. And so we'll see what the price action is this week, sitting below the 90 and 200-day SMA. But hey, again, want to be transparent. This is what happens. This totally can happen. So this is why it's important to have winners and losers. And I will always show you guys both. So again, even through the winners and losers, we are still up 11.33%. So as you guys can see, a little less than 80%. Opened up a new IWM this week, but didn't think to show it because I've just been playing them every month. I think it's kind of boring to keep showing the same chart over and over again. But Roots recovering a bit, down 8%. Their earnings is this week, so hopefully it's a good one and can recover from my Sprouts and waste management position. But if it rallies before the earnings and is at my $90 strike price, and I'm $7 away from, I might sell. So we'll see. But I'm not playing any call options. I don't want to limit my upside here. So yeah, Sprouts down about 41%, 5.4K. TLT collecting my dividend this week and gonna write some calls. I honestly expected this with the rate cut to go up and actually went down. So still keeping an eye on this. And then Occidental down 30%, a little bit of a recovery, but I'm bullish oil, and I am looking to play some more oil this week with the potential strikes on Venezuela, and I think the markets will look to go into more safe havens like gold and oil when markets are when geopolitical events like that happen. So yeah, so that's the portfolio. A lot of cash available, so we'll see what plays I make this week. Still underperforming the S&P 500 and Dow Jones, but beating the bond indexes. So again, little step backwards by a few decimal places, but still over 26% of the way there. So thank you guys for tuning in, and I will see you guys next week for the next portfolio update.